welcome to this midday market mood check with me, Nandita Khemka. When you look at the markets, a pretty good Monday it's turning out to be for the last week, given the fact that the Nifty is above that 18,600 mark, cool 80 points up, and Sensex as well up somewhere around 300 points or thereabout. There's ample strength in the broader end of the markets. Remember, last week we saw both the mid and small cap indices hitting fresh highs. In fact, the small cap index hit a fresh 52-week high, and the mid cap index hit a fresh lifetime high last week. Even though the benchmark saw a bit of consolidation, but now it seems to be coming out of that range and trading above that 18,600 mark. If you look at the market breadth, the advance decline ratio is fairly in favor of the advances, somewhere around 2:1. So there's a ample strength coming in there. Sectorally, most of the sectors are trading in the green, barring probably the FMCG pack and the realty pack. Those two weren't all that buoyant. They were trading with the marginal cuts nevertheless. But pharma, banks, IT, all of them doing extremely well. OMCs, however, have come under pressure after strength coming in on Brent crude prices, which have topped $79 a barrel after Saudi Arabia announced a production cut of somewhere around 1 million barrels per day starting from July. So that's one pocket that is under pressure. If you look at the Nifty, in fact, I have to first mention auto index. That index has hit a fresh 52-week high. You have the likes of M&M, Tata Motors trading doing extremely well in today's session. In fact, Tata Motors has hit a fresh 52-week high, and M&M is the top index gainer in today's session. Aside of that, Axis Bank, Sun Pharma, Maruti, among other gainers. And on the losing end, you have BPCL, Tech Mahindra, HUL, Divi, and Asian Paints. Let's talk to let's get on board with Ajit Mishra of Religare Broking to talk about some of the buzzing stocks in today's session, and of course what he thinks the index would do this week. Good afternoon, Ajit. Great to have you here on this show on Money Control. Let me ask you that the index is just about 300 or a little under 300 points away from record levels. Do you expect that 1880 kind of levels to be taken out this week itself, or do you think first the street will digest the RBI policy and maybe next week we could look at levels like that?
Yeah, good afternoon, Nandita. So yes, we all are awaiting a new record high in the index, especially because the banking index has made a new record high, and the other key sectors like FMCG, auto, as you were mentioning at the beginning, have already trading at the record high. So and in fact, the Lagars also have started witnessing a bit of participation with the IT and Pharma. So yes, largely, all the kind of indication that we have are in the favor that bank, Nifty should make a new record high soon. But I feel that the lack of decisiveness in the banking index, post making a new record high, is something which is keeping the market guessing. That whether we shall be spending more time around the current levels or make a new high soon. But I feel that as long as we are holding 18,300, 18,100 zone in the index, the bias should remain on the positive side. So it's a matter of time, basically, that when we are going to make a new record high. But as of now, we are seeing that sector specific, stock specific. In fact, the broader market has been outperforming the benchmark for last 7 weeks. So we are getting opportunities across board. So the focus should be more on that instead of focusing on index for a new record high. The tone is positive. Maintain buy on this approach is what charts are indicating.
Right, the tone is positive, of course. Let me just get in your thoughts on Tata Group of stocks. Of course, Tata Motors hit a fresh 52-week high, somewhere around 550 levels or thereabouts. Brokerages have predicted levels of somewhere around 600 on the stock. But we are also getting queries on our live feed whether one should hold on to their positions in Tata Motors now or look at booking profits if there is a more upside from here, or do you think there'll be some bit of a profit taking coming in at current levels? What do you suggest?
So, the auto index has made a new record high of late, and it was led by TVS, M&M. The Tata Motors was not in the picture of late, but now from the last couple of sessions we are seeing traction coming in, and broadly, if you see that it's almost like 8-9 months of kind of consolidation that Tata Motors have done. After a very phenomenal surge from the 2020 lows. So I think that the laggards means the stocks which were following the leaders in the respective sectors, they will do well, including Tata Motors. So one should definitely hold in case if the view is short to medium term. And we feel that now one should not maintain a very deeper stop losses because we are closer to the swing high or the previous swing high, which is 9 months earlier. So closer to around 530, that 25 levels is somewhere one should maintain a stop loss for Tata Motors. And we are at 580 to 600 level. So yes, you should definitely hold Tata Motors. In fact, one can look at adding a fresh position also in Tata Motors at current levels.
All right, then hold on to Tata Motors. In fact, you can even look at buying into this counter at the current juncture. Let's also talk about Tata Chemicals. The stock is up somewhere around 4%. Of course, there is news flow that the Tata Group has signed a $1.6 billion deal to start a battery EV battery unit in Gujarat. On the back of that, Tata Chemicals is up 4%. It's been a fairly good year for Tata Chemicals, given the fact that it has gained somewhere around 6% or thereabouts on a YTD basis. Time to change this momentum, Ajit?
So in fact, if you'll see the last 6 7 months of price movement in Tata Chemicals, it's more of like a concession zone because it's been hovering in a very narrow band, close to around 950 to 1050 range, and it has made multiple attempts, in the recent past to take off the upper band of the same, but it failed. So as of now, I feel that yes, you can continue to hold your existing position because we are seeing momentum today, and volumes are also from up from the average volume. So things are looking positive, but we need to hold 980 level as a stop loss in case if we are holding any trading condition. But for any sustained up move, we need a decisive close above 1050 mark. So in case if you are planning for a medium to long term kind of a bet, then one should wait and let the stock surpass 1050 levels decisively. From the short term trading perspective, with stop at 980, one can definitely attempt.
Right. Wait it out is the call on Tata Chemicals. Let's talk about the OMC basket. Of course, the likes of BPCL are under pressure given the fact that, Brent crude is back near that $80 a barrel mark. Of course, there is news flow that Saudi will be cutting output by 1 million barrel a day from July. Rising crude prices, of course, emerging as a threat given the fact that if Saudi decides to extend those cuts, it could be another added pressure for some of these OMCs. So should one stay away from this basket right now?
Yes, if you see the entire basket means HPCL, BPCL, IOC. Among these three names, IOC looks best to us. If you'll see the kind of price range that the stock have made in last 1.5 months. Others are anyways were not performing as such, despite crude being at lower level. So we feel that within the OMC basket, one should stick with the IOC, and since yes, we are seeing a bit of a pressure at the higher levels, but the tone looks positive, especially when it comes to IOC on a longer duration. So maybe a level close to around 85, 86 is a zone basically where one can look at entering into IOC with stop at around 80 and 98 to 100 as a positional target. But other counters like BPCL, HPCL definitely one should avoid because the trend looks sideways, and the in case if they recover also, I feel that the momentum would be much higher in IOC in comparison to the other.
Right, Ajit, when it comes to mid-cap IT stocks, we've seen a very good rally come in when it comes to the likes of Science, UPS, Soft, stellar run last week. Of course, in today's session, it has come under fair bit of pressure. Would you advise investors to take positions on dips, given the fact that mid-cap IT as a pocket has done fairly well, and the earnings have also been pretty good compared to large-cap peers?
So that's true, and in fact, if you see that last 1.5 month kind of a move that we had in IT index, these majors, IT majors, they have not participated much. Yes, there was marginal rebound, but some of these mid cap names they have done exceptionally well, like Cyan, Nucleus, Persistent, which is trading at the record highs. But I feel that chasing them after such a phenomenal surge, it's a bit risky considering that the stock has almost doubled in the last 1 month. If we talk about Cyan, in last 6 months. So I feel that let the stock cool down a bit. Maybe closer to around 1300, 1250 could be the zone where it might again face a base. Because today we are seeing a bit of profit taking. So in case if you have been any existing position, you should rather book profits and let the stock stabilize around 2050, 1300 zone to re-enter.
Right, that's the call. Then let's talk about PVR Inox as well. The stock is up because it has in fact raised curtains on a new seven-screen multiplex in Bengaluru. Obviously, it had seen a fair bit of pressure, post COVID, and things were slow. And as Bollywood releases, and in fact, new releases, kind of slowed down, and there was competition from OTT as well. But post merger with Inox, do you think right now would be a good time to look at this stock?
Honestly, the trend looks sideways to negative to us. Especially if we talk about from the medium to long term perspective. Short term, yes, there's a possibility that we might see the stock, witness around 5-7% kind of a gains from the current levels in just in a rebound. It has surpassed the short term averages, so that might result in further price action on the higher side, but trend has not reversed. So for reversal in the trend, we need stock to sustain, cross and sustain above 1600 mark decisively. Otherwise, this move can again fizzle out considering the overall trend. So from the short-term perspective, yes, one can attempt, and one should not again maintain strict, deeper stop losses because the overall trend is down. So we are just playing a rebound. So maybe closer to around 1390 is something that one can place a stop loss, and close to around 1500, 1520 could be the area where one should maintain as a target. Let's say for a week or two.
Right. That's the call on PVR Inox. Since, I want to also get in your thoughts on the entire hotel pack. Some of these stocks have seen a very stellar run. The likes of Indian Hotels, Wonderla Holidays today is up, 4%. On a YTD basis also, it has done fairly good, 20 to 30% gains. What about hotel stocks? Which one is looking very good out of this entire space?
So no doubt, Wonderla, Indian Hotels, they have done exceptionally well. In fact, they are trading at the record highs also. But I feel that Wonderla looks slightly overheated, considering the kind of momentum that we have already seen. And as we were discussing in the beginning of the show also, that mid cap and small cap, they are outperforming the basket. But looking at the kind of move that we have already seen, I feel that it's prudent that one should book profit, like at least partial profit in these names, and let the stock stabilize a bit. But for fresh buying, I feel Lemon Tree looks a good option because the stock has almost witnessed a decent recovery also from roughly around 72 to 94, and we feel that there could be a bit of a consolidation for week or two. Then the stock might reach toward 100, 305 levels. So here the risk reward looks favorable to us, and with stop of a 90, one can accumulate Lemon Tree at current levels.
Right, lemon tree looking most attractive from the hotels basket. I always talk to you about some of these new age companies, and today won't be any different. The tide is turning towards, in fact, the sentiment is turning favorable for Paytm on the street. Stock is above 700 or thereabouts. It has today reported a 24% jump in monthly transacting users as well. Uh, a lot of brokerages have come out with target prices of somewhere around 1150 or thereabouts. What are your own thoughts? Do you expect that to happen in the next, say, 3 4 months?
So 3-4 months is it might be too aggressive, but one thing which have changed for Paytm is that yes, we are seeing a bit of stability in these stock prices, the way they move, and the kind of decline during the down days is also subdued. So this is something which is positive. The stock has holding strongly above the short term averages also, which is adding to the positivity. So there's a possibility that we might see this stock inch toward, let's say, 760, 800 zone, in the weeks to come. But very aggressive target is something that one should wait and let the stock stabilize above 825. In that case, there could be a medium term reversal that we might see, which could help the stock to scale towards 1050, 1100 mark. But as of now, one should be very strict with the stop losses because we all know that we had this kind of move earlier also, but they fizzle out in no time, in case if something goes wrong. So do
Hmm.
maintain strict stop losses, especially when you are trading new age companies.
Well, maintain fixed stop losses while trading in the new age companies. With that, Ajit, before I let you go, any recommendations for viewers this afternoon?
So yes, certainly, because we are seeing across the sector participation, and BHA looks very strong. After this recent consolidation that we have seen in chart. So I feel that BEL, HAL, they are anyways witnessing strong traction. So BHAL also should participate in that move. And 93 is something that we are eyeing in a very shorter duration. With stop of 81, one can look at BHL for going long. And Tata Power also, like after a long corrective phase, looks set for a reversal. So in case of the view is 1 to 2 weeks, one can accumulate this stock. 224 is what we are eyeing as a immediate target, and positionally around 240. And you should maintain a stop loss at 215 for Tata Power.
Well, Tata Power, BHEL, two of the stock recommendations coming in from Ajit. Ajit, with that, thanks a lot for taking our time and joining in this morning and sharing all your thoughts about human stocks with us. Well, for viewers, thanks a lot for watching. We are done with this midday market news check, but of course, I'll be back with all the closing action at 3:30 p.m. On closing bell. Don't forget to tune in. And in the meantime, for all your other news and financial updates, don't forget to move on to, in fact, log into moneycontrol.com.